It's Thursday, May 16th. Welcome to MarketFoolery. I'm Chris Hill. Joining me in studio today from Motley Fool, Supernova, Matt Argersinger, and from $1 Million Portfolio, Mr. Charly Travers. Happy Thursday, guys.
Hey, glad to be here.
We're going to talk Tesla Motors, which appears to be a stock incapable of falling. We're going to talk about a couple of big Dow stocks reporting earnings, Walmart and Cisco Systems. But two quick housekeeping notes. One is that this morning, the Gerald Loeb Award nominations were announced, and for those who don't know, and I'm assuming amongst our dozens of listeners, that's pretty much everyone. The Gerald Loeb Award is essentially the highest award in the world of business journalism, and I am very happy to report that in the category of commentary for business and financial reporting, the Motley Fool has not one, but two nominees. We got 40% of the nominations.
Bringing the heat.
We are bringing the heat. Morgan Housel and Lon Moskovitz, both nominated in the commentary category. And again, this is an award that people like Paul Krugman, Andrew Ross Sorkin, and others have won. So just great news for those guys and for the Fool.
Bravo. And, Elon Moskovitz, classmate in the first analyst development program here at the Fool.
Was he?
5 years ago. Yeah, he was my classmate.
Wow. And what have you done?
Hey, I'm on this podcast. That's got to be worth something.
There you go. As we were talking about before, the Gerald Loeb Awards needs to get into the 21st century and include a podcast category. I feel like MarketFoolery might have a shot then. But the second little bit of housekeeping, I got to my desk this morning. There was a letter waiting for me. I'm assuming this is from one of our dozens of listeners because recently I mentioned that I'm going to be in the market for a new car because one of my cars has basically died, and I need to get a new one. I'm looking for like a trade-in.
Like a Model S. Okay.
No, I'm not looking for a Model S. I am not Alex Scherer. And so I open up the letter, and it is a full-page ad for Dar Cars, basically a car dealership in New Carrollton, Maryland, and just a sticky note that says, Chris, trade now for top dollar. And it's just signed the letter J. Which all I could think was, isn't that Will Smith in the Men in Black movie? He's Agent J, isn't he? I think.
I'll go with you on that.
I don't think it's him, but I think it's one of our listeners basically saying, hey, you're looking for a new car? Head on out to New Carrollton, Maryland. So thank you. I appreciate that.
Rock on.
I will check that out. All right, let's start with Tesla Motors. Tesla is raising $230 million through a secondary stock offering. And Matt, usually this is the kind of shareholder dilution event that leads to a stock falling. Why are shares up in the neighborhood of 10% this morning on this news?
About 5 days ago, I think Tesla turned into Teflon Motors.
Yeah.
Because it seems like, no matter what happens, Tesla's going to go up 10% every day on the news. And again, it's up today. So they're raising a total of $830 million, part through issuing a secondary and then issuing convertible debt, paying back their government loan, which is a good thing. But the story here probably is that Elon Musk himself, the CEO, is going to buy $100 million worth of stock, $45 million in the secondary, and then $55 million maybe as a follow-on. So he's investing $100 million of his own money. That certainly, because if you factor in the Tesla's current market cap plus whatever this offering ends up being, there's about $11 billion market cap now. And he's saying, I'm buying $100 million right now, and that's. That gives you some faith that he thinks the company and the stock value could go a lot higher. But this company can really do no wrong. I mean, I just feel like I'm getting nervous myself because I see the headlines now. Oh, Tesla's now it's America's fourth auto company, and it's the new Toyota Prius. Right. I mean, they're going to sell about 21,000 cars, which in the scheme of auto business, it's a tiny.
Let's be clear.
Fraction.
That's not a lot of cars.
Not a lot of cars, but hey, they're going to be pretty profitable, probably especially next year, and hey, it could be worth a lot more, and certainly Elon Musk thinks so.
The Musk buy here is the real key because if you see these growth stocks go up 2 or 3-fold, and all of a sudden it's like, hey, there's an offering, we're looking to sell stock and raise money. That tends to call at least a short-term top in the stock.
Every time.
Because people are like, they're willing to sell to us. But Musk stepping up here and saying it's still a good buy at this price, I think is what made this a unique situation that you tend not to see very often.
Mm-hmm. Let's assume, for the sake of argument, that the massive short selling that we saw over the last 3 months, let's assume that while it won't go away completely, that it probably scared off some short sellers. There were some saying, you know what, I'm just not going to touch this anymore. Don't you feel like the stock is now at a point where any misstep and it's going to drop pretty significantly?
I think so. I mean, I think there's a lot of air underneath the stock. I mean, as we talked before, a lot of this was just a short squeeze. It was money being
They had their first profitable quarter ever, which is like no one was expecting that, and that's legitimate. But
when I see, for example, a Wall Street bank, which I will not name, raise their price target from 47 to 103 in like 4 days ago after
Morgan Stanley.
There you go. I didn't say it, but that to me says, gosh, we've gotten to a point where now everyone's kind of in on the story now with Tesla, and everyone's a fan. Whereas, if you go back 3 months ago, there was all this commentary out there that, gosh, Tesla might not make it through 2013 if Model S sales don't pick up, or if the Model X is a bust. Model X being the new SUV version coming out probably next year. This company might not be around in a year or two, and now they can do no wrong. So that to me always thinks there's a lot of air underneath the stock right now.
In January, the stock traded in the mid-30s. As of this taping, it's in the low 90s. If anyone is looking at all of this attention being paid to Tesla, what do you tell them? Do you say wait for a pullback because it is almost certainly coming at some point in this calendar year?
It is definitely coming, as Charlie and I were saying. If you are an ultra long-term investor and you can believe in the story for the next at least 5 years, maybe 10 years, I think it's fine, because I think the capital allocation the raise here is a smart thing with the stock price at an all-time high and the fact that the news is so positive. But I would be cautious. This is certainly a much riskier investment right now, obviously, than it was a month ago.
Walmart's first quarter earnings were in line with expectations, but same-store sales fell almost 1.5%. And Charlie, they also lowered guidance for the second quarter, so not surprisingly, the stock down a couple of ticks this morning.
So I thought they put the same-store sales problem behind them. They went through a stretch, I think it was 2 years running, where every quarter their same-store sales were down, and then they seemed to...
In the U.S.?
In the U.S.
Was it in the U.S. or just...
Just in the U.S.
Okay.
And then it seemed like they fixed that problem, but here we are down again. CEO Michael Duke came out and said consumers just don't want to shop at Walmart anymore. No, he didn't really say that. You'll never hear a CEO say that. Instead, you hear delay in income tax refunds, retail favorite, the weather, the payroll tax increase.
You had me there. I really thought he said that. He said that? Really?
No,
I'm surprised.
I'd be really impressed if he said that. And I think for companies like Walmart, which are hitting middle America consumers, that payroll tax increase is actually fairly significant to their business. I don't want to make light of that. But long term, I'm a believer in Walmart. I think they're doing a lot of the right things. In particular, they finally raised their membership fee for Sam's Club, first time in 7 years.
Wow.
So that's a nice little boost they're going to get there. And then the smaller footprint neighborhood market stores, which are full-service grocery stores, they're going to put down 100 new stores a year there. So I think in the long run, they're going to be fine. Just have modest expectations here.
It's kind of amazing, though, that if you take into account the problems that they had, particularly here in the U.S. with same-store sales, you look at a chart of this stock over the last 1, 2, 5 years, it's beating the market. I mean, it's not doing crazy things like Tesla, nor should it, given the size of the company, but it is a very steady outperformer.
Well, so for the long time, this was a stock that went nowhere. It was lumped in the same category as a Microsoft over the last decade, and it was trading down at 10 times earnings not that long ago with a yield over 3%. And I think the market finally woke up that this is a high-quality retailer trading at an attractive valuation.
Cisco Systems' first quarter profits came in higher than expected. They had a good outlook for the second quarter. Almost single-handedly, this stock is propping up the Dow index today because shares up more than 10% this morning. I've owned this stock for a long time. I can't think of a time when it's got to be at least a decade since it's had this kind of move upwards. It certainly had moves down, but what is going on at Cisco Systems, man?
Well, yeah, I mean, it's probably a situation where bad expectations meet slightly better results, I think. I mean, because a lot of their competitors, whether it's Juniper Networks or some other ones, the news has been pretty bad, especially in the enterprise big space. But Cisco seemed to have pretty decent results here. I was impressed by the way that their federal government spending, which I think accounts for about 20% of the revenue, was down 3%, which you probably expect given the way that the state of the government. But they had state and local government spending was up 5%, which, gosh, I didn't really know.
That's surprising.
That was surprising to me. So Things are going well, and they see particularly the Americas, I guess, which includes the U.S. obviously, and emerging markets seem to be doing well and mostly offsetting the downside they're seeing in Asia and Europe and some other places.
So the parts of their business that are in line with what we think of as the big technology trends, like cloud computing, data centers, wireless, those are pretty strong performers for them. Like the data center business is up 77%, wireless up 27%.
Wow.
So I think like their core router kind of stuff where they're competing with cheap commodity products is maybe not doing so well, but the higher end products seem to be catching wind for them. I can't say I know exactly what Cisco does. I try and stream video to my phone, and it's just like works like magic. But I rely on them to pull it off.
Right, and I think we've talked for a while now that there has been sort of this replacement cycle of technology for a lot of companies. It keeps being pushed and pushed and pushed.
Right.
And at some point, companies are just going to have to start upping their CapEx spending. And so I don't know. Cisco and Cisco is also one of those. Speaking of Walmart and Microsoft, it's been in a rut for a long time, and this is kind of the first breakout it's had. So. Hey, there you go.
I want to go back to something you said earlier about because part of there were some lowered expectations for Cisco going into this quarter, and part of that had to do with the latest results from Juniper, from IBM.
Right.
And I'm just curious how you guys think. We hear different stocks being referred to as bellwether stocks, and I'm just curious. Do you, when you look at technology writ large, particularly when it comes to the infrastructure and the CapEx spending that you were talking about, Matt, do you look at one company as having greater weight as being a bellwether over the others, or do you sort of lump IBM and Cisco together, or is it just something that is just played up in the media and you think, you know what, yes, there are trends, but individual companies are individual companies?
Yeah, it's tough to say. I mean, I certainly think when you see results from IBM or Cisco or Microsoft, you put a little higher weight than something like a small software company like Click Technologies for some reason. But you learn a lot, I think, seeing where particularly corporations are spending their money, and certain companies who happen to be, say, in the cloud space or in the storage space or in the security space, which we've seen there's been a lot of gains in that particular technology sector lately. Corporations follow the trends, and if those certain trends are strong, certain companies who have niche products in those spaces are going to do well.
I don't want to jinx my fellow shareholders of Cisco Systems, but just like we talked recently about Johnson & Johnson, which is now, I think, on a 2 or 3 quarter streak of not having any kind of significant screw-up or recall, again, knock on wood, it seems like it's been a little while since we've had to talk about Cisco Systems making a fall-down stupid acquisition and lighting a pile of money on fire. In all seriousness, though, when you look at this company, and you see these results, do you think on any level that they are becoming more focused and saying, you know what, the Cisco of 5 years ago, where we were chasing the next gadget and buying flip cam and then writing down hundreds of millions of dollars, is that in the past, or is it just a matter of time before they do it again? Because again, John Chambers has been CEO for a very long time.
Sure.
So this is a business that's a serial acquirer, always has been, and
That's a good way of putting it.
There's always integration risk. There's always the possibility that something you buy isn't going to work out. You're going to end up writing it down. They were just making more acquisitions within the recent quarter for some wireless technology. I have no idea if that's going to work, but to your point, I think don't be surprised if there's write-downs in the future.
Shares more than a 2-year high. What do you think? Is it still a good buy at this price, or is it now starting to get a little, to use a Jason Moser term, frothy?
Frothy? No, just glancing quickly at Cisco, I don't think it looks frothy to me. And what's the dividend yield now?
It's I think I want to say 2.5. But yeah, they've been very aggressive with stock buybacks when the price is beaten down. They've been aggressively raising that dividend as well.
Right.
So those are the kind of things I like to see in a big company like this.
All right. Charly, Travers, Matt Argersinger. Guys, thanks for being here.
Thank you.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's it for this edition of Market Foolery. Our producer is Matt Greer. I'm Chris Hill. Thanks for listening. We'll see you on Monday.